Based on the historical data and forecast, Bitcoin shows a slight downward trend in the near future. The RSI consistently remains below 50, indicating that the asset is generally oversold. The Bollinger Bands are narrowing, suggesting a period of low volatility followed by a potential breakout. Considering these factors, I propose a cautious long strategy targeting a moderate return. We will enter a long position at $86,300, coinciding with the initial forecast price. A stop loss will be placed at $84,400, just below the bottom of the Bollinger Bands, to protect against a sudden downturn. The target price will be set at $88,700, near the support price, aiming to capitalize on a potential bounce. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating a strong oversold condition, we will initiate a long position at $86,100, with a stop loss at $84,600 and a target price of $88,500. Conversely, if the RSI reaches 80 or above, suggesting an overbought condition, we will avoid entering a long position. This combined approach, leveraging both Bollinger Bands and RSI, aims to maximize returns while mitigating risk, providing a balanced and adaptive investment strategy for Bitcoin. Based on the historical data and forecast, Ethereum shows a fluctuating trend with a significant support level at $2,900. The RSI values, generally ranging between 37.5 and 47.1, indicate that the asset is neither strongly overbought nor oversold. However, the forecast for the next week predicts a downward trend, starting at $2,910 and decreasing to $2,880, then slightly increasing to $2,900. Considering the support level at $2,900 and the downward forecast, I recommend a short position strategy. Entry price will be $2,910, with a stop loss set at $2,930 to protect against a potential upward reversal. The target price for this short position will be $2,880, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate Bollinger Bands. The price has been trading within the bands recently, with the bottom band around $2,730 and the top band around $3,290. Given the forecast and the RSI readings, I suggest a conservative approach. If the price touches the upper Bollinger Band around $2,930, it's a signal to exit the short position or move the stop loss lower. The final portfolio will be a short position with an entry price of $2,910, a stop loss of $2,930, and a target price of $2,880. This strategy balances the predicted downward trend with risk management through the stop loss and incorporates Bollinger Bands for additional confirmation. Based on the historical data and forecast, BNB has shown a slight upward trend with periods of consolidation. The RSI consistently stays within the 37 to 47 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering these factors, I recommend a moderately bullish strategy. We will look for opportunities to enter long positions when the RSI dips towards 38 and the price touches the lower Bollinger Band. Specifically, I suggest entering a long position at $843. Place a stop-loss order at $829, coinciding with the support level, to limit potential losses. Set a target price of $860, aligning with the forecast price for January 4, 2026. This strategy combines the RSI and Bollinger Band signals with the support level for a balanced approach. If the price reaches the target, consider taking profits and reevaluating the market conditions. This approach allows for capitalizing on the anticipated upward trend while mitigating risk with a defined stop loss. Based on the historical data and forecast, XRP shows a slight downward trend with recent price fluctuations around the $1.86 to $1.93 range. The RSI consistently hovers below 50, indicating a generally weak momentum, with dips below 30 signaling oversold conditions. The Bollinger Bands show that the price has been approaching the lower band, suggesting a potential for a short-term bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term pullbacks. Therefore, I propose a portfolio with a combined strategy. First, when the RSI falls below 30, enter a long position at $1.82 with a stop loss at $1.79 and a target price of $1.88. Second, when the price touches the lower Bollinger Band, enter a long position at $1.80 with a stop loss at $1.76 and a target price of $1.86. Third, when the price touches the resistance price of $1.9, enter a short position at $1.90 with a stop loss at $1.93 and a target price of $1.86. Combining these strategies will provide a balanced portfolio with opportunities for profit in both rising and falling markets. Based on the historical data and forecast, Solana shows a sideways trend with support at $119 and resistance at $127. The RSI values fluctuate between 33.0 and 43.6, indicating periods of oversold and overbought conditions. The Bollinger Bands show the price fluctuating within a range, with the bottom band consistently near the support price of $119. Considering this, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. The strategy involves entering long positions when the RSI falls below 35 and the price touches the bottom of the Bollinger Bands, which is around $119. This suggests a potential oversold condition. The entry price will be $119. The stop loss will be set just below the support level at $117 to limit potential losses. The target price will be set at the resistance level of $127, aiming to capture a bounce from the oversold condition. This strategy aims for a quick profit by exploiting short-term volatility within the defined support and resistance range. The forecast data indicates a slight downward pressure, reinforcing the potential for the price to test the support level, making this a viable strategy. Based on the historical data and forecast, TRON shows a slightly upward trend with consistent support around $0.279. The RSI fluctuates between 45 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. The forecast predicts a continued upward trajectory, reaching $0.288. Therefore, I recommend a long position strategy. We will enter a long position at $0.284. Given the support level at $0.279, we will set a stop-loss order at $0.279 to limit potential losses. The initial target price will be $0.297, the resistance level. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30, we'll consider a more aggressive long entry. When the RSI exceeds 70, we'll consider taking profits or tightening stop-loss orders. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price breaks above the upper Bollinger Band, it indicates a strong upward momentum. Combining these signals with the overall trend, I suggest adjusting the target price to $0.288 based on the forecast. This combined strategy provides a balanced approach, capitalizing on the upward trend while mitigating risks with precise entry and exit points. Based on the historical data and forecast, Dogecoin shows a downtrend. The price has been fluctuating within a range bounded by a support of $0.122 and a resistance of $0.129. The RSI indicates oversold conditions, fluctuating between 31.7 and 42.5, suggesting potential for a short-term bounce, but the overall trend remains bearish. The Bollinger Bands are narrowing, indicating decreasing volatility, and the forecast predicts a further decline, with prices dropping to $0.117. Therefore, I recommend a contrarian short strategy, capitalizing on the expected downward movement. We will initiate a short position at $0.124. Given the recent price action and the forecast, we will place a stop-loss order at $0.129, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.118, aligning with the forecast. If the price reaches $0.118, we will reevaluate the market conditions and consider adjusting the stop-loss and target price based on the RSI and Bollinger Bands. This strategy aims for a quick profit by exploiting the predicted downward trend, while carefully managing risk with a well-defined stop-loss. Based on the historical data and forecast, Cardano shows a downtrend with significant volatility. The RSI consistently fluctuates below 50, indicating a generally weak momentum. Considering the RSI is currently at 41.9 and approaching the oversold level of 20, I recommend a contrarian strategy focusing on potential short-term bounces. Our entry price will be $0.348, coinciding with the recent forecast price and a slight dip. To manage risk, a stop loss will be set at $0.355, just above the recent forecast range. The initial target price is $0.37, aligning with the immediate resistance level. To further refine this strategy, we'll incorporate the Bollinger Bands. The price has been oscillating within the bands, and the current position is near the lower band, suggesting a potential rebound. If the price breaks above the upper Bollinger Band, which is at $0.453, it would signal a stronger upward trend, and we could consider raising the target price to $0.401. However, if the price fails to reach the resistance level of $0.37 and falls below the support level of $0.344, we will exit the position to minimize losses. This combined RSI and Bollinger Bands approach aims to capitalize on short-term volatility while mitigating downside risk. Based on the historical data and forecast, Bitcoin Cash shows a clear upward trend. The price has consistently tested the support level of $598 and bounced back, while the forecast suggests continued growth towards $657. The RSI values have fluctuated but generally indicate a neutral to slightly overbought condition, with values above $50. Considering the Bollinger Bands, the price has been trending within the bands, suggesting moderate volatility. Therefore, I recommend a long position strategy focusing on capitalizing on the upward momentum. Specifically, I suggest entering a long position at $610. Given the recent price action and forecast, this offers a good entry point. Set a stop loss at $598, just below the established support level, to protect against a potential downside reversal. For the target price, I aim for $649, aligning with the forecast peak. This strategy combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk. This portfolio is the most efficient because it combines the three strategies. Based on the historical data and forecast, Wrapped Beacon ETH shows a mixed trend with periods of consolidation and minor upward movement. The support price remains consistently at $3,150, while the resistance fluctuates around $3,220. The RSI values are generally below 50, indicating a weakening upward momentum. The Bollinger Bands show that the price has been oscillating within a range, with the lower band consistently below the closing price, suggesting potential for short-term declines. Considering these factors, I propose a cautious strategy focusing on short-term opportunities. My strategy involves a combination of RSI and Bollinger Band signals. I recommend a short position at $3,180, with a stop loss placed at $3,200 to protect against a potential bounce. The initial target price for this short position is $3,130, aligning with the forecast data and the lower Bollinger Band. If the price breaks through the $3,130 level, I suggest tightening the stop loss to $3,140 and setting a more ambitious target price of $3,100, capitalizing on a deeper decline. This approach balances risk and reward, leveraging both technical indicators to maximize potential returns while minimizing losses. Based on the historical data and forecast, Gnosis shows a slight upward trend, with support consistently at $113 and resistance around $128. The RSI has been fluctuating between 37 and 54, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been trending towards the lower band, suggesting a potential for a rebound. Given the RSI is currently at 53.7, we are approaching overbought territory. Considering the forecast for the next week, which predicts a stable price around $123 to $124, I recommend a cautious long position. The entry price should be $122, coinciding with the start of the forecast period and a slight pullback from the recent high. Set a stop loss at $119 to protect against a potential downward reversal. The initial target price should be $125, representing a reasonable profit based on the resistance level and forecast. If the price reaches $125, consider moving the stop loss to break even at $122 to secure the profit and potentially allow for further gains if the upward trend continues. This strategy combines elements of trend following, RSI-based signals, and Bollinger Band analysis for a balanced approach to maximize returns while managing risk. Based on the historical data and forecast, plasma has shown considerable volatility. The RSI consistently remains below 50, indicating a potential downtrend, but has recently approached the 40s, suggesting weakening selling pressure. The Bollinger Bands show that the price has been fluctuating around the lower band, indicating potential oversold conditions. The forecast for the next week predicts a slight upward trend, hovering around $0.137. Considering this, I propose a strategy focused on capitalizing on potential short-term bounces while managing risk. My recommended strategy is to initiate a long position at $0.132, coinciding with the first day of the forecast. Given the proximity to the support price of $0.13, a stop loss should be placed just below it at $0.128 to limit potential losses. The target price is set at $0.144, aligning with the upper forecast range and providing a reasonable profit margin. This strategy combines the RSI's oversold signal with the Bollinger Band's potential for a price rebound, while the support price acts as a safety net. The RSI is above 30, so we should be cautious about the upward trend. The forecast is slightly upward, so we should be optimistic about the potential. Based on the historical data and forecast, Filecoin shows a volatile trend with periods of both upward and downward movement. The RSI consistently dips below 30, indicating oversold conditions, while the price fluctuates around the Bollinger Bands, suggesting potential for mean reversion. Considering the forecast for the next week, with prices ranging from $1.25 to $1.27, and the recent RSI readings, a long position strategy is recommended. We will enter a long position at $1.24, placing a stop-loss order at $1.21 to limit potential losses. The initial target price will be $1.3, aiming to capitalize on a potential bounce back towards the middle of the Bollinger Bands. To refine the strategy, we will incorporate a dynamic target price adjustment. If the price reaches $1.3, we will move the stop-loss to the entry price of $1.24, securing profits while allowing for further upside. If the price continues to rise, we will adjust the target price to $1.33. However, if the price shows signs of reversal, such as an RSI exceeding 70 or the price touching the upper Bollinger Band, we will close the position and reevaluate the market conditions. This adaptive approach combines RSI-based entry with Bollinger Band-informed target adjustments, creating a robust and potentially high-return investment strategy. Based on the historical data and forecast, BNB has shown a slight upward trend with periods of consolidation. The RSI consistently stays within the 37 to 47 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering these factors, I recommend a moderately bullish strategy. We will look for opportunities to enter long positions when the RSI dips towards 38 and the price touches the lower Bollinger Band. Specifically, I suggest entering a long position at $843. Place a stop-loss order at $829, coinciding with the support level, to limit potential losses. Set a target price of $860, aligning with the forecast price for January 4, 2026. This strategy combines the RSI and Bollinger Band signals with the support level for a balanced approach. If the price reaches the target, consider taking profits and reevaluating the market conditions. This approach allows for capitalizing on the anticipated upward trend while mitigating risk with a defined stop-loss. Based on the historical data and forecast, TRON exhibits a clear upward trend, supported by consistently increasing close prices from $1.5 to $1.65, and a forecast projecting further gains to $1.69. The RSI consistently fluctuates between 35 and 59, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been trending towards the upper band, suggesting bullish momentum. Combining these signals, I propose a strategy that leverages the anticipated upward movement while mitigating risk. My recommended strategy is a tiered entry approach. Initially, enter a long position at $1.56, placing a stop-loss order at $1.5 to protect against a potential reversal. The first target price is $1.61, aiming to capitalize on the initial forecast movement. If the price reaches $1.61, consider adding to the position at $1.62 with a revised stop-loss placed just below $1.6. The final target price is $1.68, reflecting the upper end of the forecast range. This layered approach allows for maximizing profits while minimizing potential losses, adapting to the evolving market conditions. Based on the historical data and forecast, Lido DAO shows a slight upward trend, although it has been fluctuating significantly. The RSI consistently remains below 80, indicating it's not in an overbought condition, and frequently dips below 40, suggesting oversold periods. The Bollinger Bands have been narrowing recently, which often precedes a breakout. Given the support price of $0.571 and the current RSI levels, I recommend a long position entry at $0.551. A stop-loss should be placed just below the recent low at $0.504 to mitigate potential losses if the price reverses. The initial target price is set at the resistance level of $0.618, representing a substantial gain. To refine this strategy, I'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. Therefore, if the price falls to $0.504, we re-enter at $0.504 with a stop-loss at $0.499, aiming for a target price of $0.618. If the price breaks above the upper band, it suggests a strong upward momentum, potentially revising the target price upwards. This blended strategy, combining RSI and Bollinger Bands, offers a robust approach to capitalize on Lido DAO's potential while managing risk effectively. Based on the historical data and forecast, Tezos demonstrates a recent upward trend, supported by the increasing RSI values moving towards the middle range and the forecast prices consistently above the recent close. The RSI, fluctuating between 31.2 and 57.4, indicates periods of both oversold and overbought conditions. Considering the Bollinger Bands, the price has been trending towards the upper band recently, suggesting bullish momentum. Therefore, I propose a bullish strategy focused on capitalizing on this upward trajectory. My recommended strategy is to enter a long position at $0.469, coinciding with the initial forecast price. Given the recent volatility, I suggest a stop-loss order at $0.463, just below the bottom of the Bollinger Bands to mitigate potential losses. The target price should be set at $0.503, aligning with the forecast price for January 2, 2026, and providing a reasonable profit margin. This strategy combines the bullish forecast with RSI and Bollinger Bands indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a clear upward trend with consistent support at $447. The RSI consistently remained below 80, indicating that the asset isn't overbought. The forecast prices predict a continued rise, reaching $533 by January 4, 2026. Therefore, I propose a long-term investment strategy with a focus on capitalizing on this upward momentum. We will enter a long position at $458 on December 29, 2025. A stop-loss will be placed at $447 to protect against potential downside risks. The initial target price will be $526, aiming to capture a significant portion of the forecasted upward movement. To optimize our returns, we will implement a dynamic target price adjustment based on the Bollinger Bands. As the price approaches the upper band, we will consider taking partial profits while maintaining a portion of our position to benefit from further potential gains. Specifically, if the price reaches $526, we will sell 50% of our holdings and adjust the stop loss to $516. If the price continues to rise and touches the upper Bollinger Band, we will sell the remaining 50% at $533 and close the position. This strategy combines the RSI and Bollinger Bands to identify optimal entry, exit, and risk management points, maximizing potential returns while minimizing downside exposure. Based on the historical data and forecast, SKY shows a slight upward trend. The RSI fluctuates between 54.8 and 69.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for high returns. We will initiate a long position when the RSI dips below 20, and the price touches the lower Bollinger Band. Specifically, let's implement the following strategy. Enter a long position at $0.063, placing a stop-loss order at $0.0598, just below the support level. The initial target price will be $0.068, the resistance level. If the price reaches the target, we will move the stop-loss to the entry price $0.063 to secure profits and protect against potential reversals. The forecast data indicates a stable price around $0.064 for the next week, providing a reasonable window for the strategy to play out. This approach balances risk and reward, aiming for high returns while safeguarding against significant losses. Based on the historical data and forecast, Uniswap exhibits a generally upward trend with significant volatility. The price has been fluctuating within a defined range between the support price of $6.1 and the resistance price of $7.08. The RSI indicator has been largely below 80, indicating that the asset is not consistently overbought, but has spent periods below 30, suggesting oversold conditions. The Bollinger Bands have widened, reflecting increased volatility, and the price has frequently touched or breached both the upper and lower bands. Considering this, I recommend a combined strategy leveraging both RSI and Bollinger Bands, with a focus on capitalizing on short-term pullbacks within the broader uptrend. My recommended strategy involves a buy position when the RSI dips below 30 and the price touches the lower Bollinger Band. For example, if the RSI falls to 28 and the price reaches $5.82, enter a long position at $5.82. Place a stop-loss order at $6.1, just below the support level, to protect against a potential trend reversal. Set the initial target price at $6.32, aligning with the upper Bollinger Band and a reasonable profit margin. If the price continues to rise, consider moving the stop-loss higher to lock in profits and adjust the target price to $6.43, coinciding with the upper Bollinger Band. This strategy aims to capture gains during temporary price dips while maintaining risk management through strategic stop-loss placement.